if I told you that the modern financial system was not invented by math geniuses on Wall Street or brilliant economists sitting in Ivy League towers, but by a group of greedy merchants in the 1600s who realized that risking their own wealth on boats was a terrible and highly stressful business model, when they could easily convince the local blacksmith to fund their dangerous global ambitions. Instead, welcome to money's hidden past. Rich people lied. We fact-checked. Today, we are traveling back to the docks of Amsterdam in the year 1602 to witness a financial revolution. We are going to look at the Dutch East India Company, or, as it was known in its native language, the VOC, a corporation so massive and ruthlessly efficient that it makes today's tech monopolies look like charities. At the dawn of the 17th century, the world was experiencing a massive shift in trade, and the most valuable commodity on the entire planet was not gold or silver, but basic cooking spices. Things like pepper, nutmeg, cinnamon, and cloves were considered absolute luxury items in Europe because food back then was incredibly bland, and spices were also used for early medicine. If you could successfully sail a wooden ship from Europe all the way to the Indonesian archipelago, fill it to the brim with a mountain of nutmeg, and sail it back without dying, you became royalty. The profit margins were completely out of this world, sometimes reaching upward of 400% on a single voyage that managed to return home. But there was one massive and terrifying catch. The journey was practically a suicide mission. Ships had to navigate unmapped and violent oceans, dodge heavily armed Portuguese rival vessels, and survive diseases like scurvy and dysentery. It was essentially a maritime casino of death, and wealthy Dutch merchants were getting tired of putting all their massive fortunes into one ship, only to watch that ship sink to the bottom of the sea if a ship sank. The merchant was instantly bankrupt, ruined, and left with absolutely nothing to his name. It was simply too much risk for one person to carry, even for the wealthiest elites of the Dutch Republic. So the politicians and the merchants had a brilliant idea, a truly devious and spectacular financial innovation. Why should the wealthy elites carry all the fatal risk? When the working class could carry it for them in 1602, the Dutch government forced all the smaller competing trade syndicates to merge into one giant entity, creating the United East India Company, or the VOC, and they granted it an absolute legal monopoly. But this was not just a normal trading company. The government gave the VOC powers of a sovereign nation. They could legally build forts, maintain their own army, negotiate treaties, and execute their own prisoners. They were a heavily armed corporate military machine, but to build this machine, they needed massive capital. They needed more money than the rich guys had on hand, so they opened the investment pool to the general public. This was the absolute turning point in financial history for the first time ever. A company issued public stock. They posted notices all around the city of Amsterdam inviting literally anyone to buy a piece of the action. You did not have to be an aristocrat or a lord. You could be a baker, a butcher, or a lowly shoemaker. And you could walk into the house of Dirk van Ost and sign your name in a massive leather-bound ledger by signing that book and handing over your hard-earned guilders. You legally owned a tiny fractional percentage of the VOC. You owned a sliver of the ships, the cannons, the sails, and most importantly, a sliver of the future profits. This introduced the concept of limited liability, which is the foundation of all modern capitalism. If the entire VOC fleet sank in a terrifying typhoon, the company could not come after your house or your farm. You would only lose the exact amount of money you put in, which made investing incredibly appealing to the masses. Suddenly, thousands of ordinary Dutch citizens were happily funding a violent colonial enterprise. Widows, orphans, servants, and wealthy merchants alike all stood in the same line to sign the company ledger, effectively inventing the modern shareholder class and socializing the massive risks of global trade. But the genius of the VOC did not stop at the IPO, because global trade in the 1600s was painfully slow. A ship leaving Amsterdam for the Spice Islands might not return for 2 or 3 agonizing years. The citizens who bought these fractional shares soon realized that their money was completely locked up. What if the baker needed cash to fix his broken oven, but his money was floating somewhere near Madagascar? Necessity is the mother of all financial invention, and the Dutch shareholders quickly figured out a loophole. The company would not give them their money back early, but there was no law saying they could not sell their receipt. Shareholders started meeting on a bridge in Amsterdam and offering their VOC shares to other random citizens. If the news from the east was good, the price went up. If a rumor said a ship sank, the price violently crashed. This informal gathering of screaming and trading citizens was the birth of the Amsterdam Stock Exchange, the very first official stock market in human history built entirely around trading. The shares of a single company, people were trading shares in coffee houses and taverns, arguing over the valuation of a fleet of wooden boats that they could not even see and did not truly understand. And where there is a market, there are market manipulators. Almost immediately, a man named Isaac Lemaire stepped in. He was a former VOC director who grew to hate the company, and he decided he wanted to completely destroy their stock. Lemaire invented the practice of short selling. He sold shares of the VOC that he did not actually own, betting heavily that the price of the stock would drop, and then he spread vicious rumors to cause a massive panic. He hired agents to tell the public that ships were lost, that the Portuguese had destroyed the Dutch fleet, and he successfully drove the stock price into the ground, making a fortune on the exact misery he artificially created. The VOC board of directors was absolutely furious. They lobbied the government to ban short selling entirely, proving that corporate executives complaining about short sellers is a tradition that dates back exactly 400 years. Despite the manipulation, the VOC was wildly successful. The wealth that flowed back into Amsterdam was staggering, but we have to look closely at how that wealth was made, because the rich people lied about the nature of their trade. The VOC was not competing in a free and fair open market. They were operating a brutally violent extortion racket. They did not just sail to Indonesia and ask nicely for spices. They arrived with heavily armed warships and mercenaries when the natives of the Banda Islands refused to cooperate and tried to sell their precious nutmeg to the British. The VOC sent a governor named Jan Pieterszoon Cohen, who decided that market competition was too inconvenient. Cohen used his corporate army to slaughter the local population, wiping out thousands of people to secure the nutmeg monopoly. It was corporate colonialism in its absolute darkest form, driven entirely by the need to deliver shareholder value. The baker and the blacksmith back home in Amsterdam likely had no idea about the blood spilled in their name. They only knew that when the massive ships returned home, the company paid out incredibly generous annual dividends, and those dividends were not always paid in boring cash in the early days when the company was short on gold. They literally paid their shareholders in tons of raw spice, giving investors giant sacks of pepper and mace as profit. Imagine logging into your modern brokerage account today, and instead of a cash dividend from Apple or Amazon, Jeff Bezos just drops 100 pounds of cinnamon on your lawn. That was the reality of the 17th century stock market. The VOC became the most valuable corporation in history at its absolute peak. During the infamous tulip mania, the company was valued at roughly 78 million guilders, which economists translate to trillions of dollars. Today, they dwarfed the modern valuations of Apple and Microsoft. They employed tens of thousands of people across the globe. They minted their own currency and dictated global politics. They were the ultimate untouchable corporate behemoth. But like all massive empires built on greed and monopoly, the foundations eventually began to rot from the inside out. The cost of maintaining a massive corporate military started to completely erase those massive profit margins. The directors and managers became incredibly corrupt, skimming profits and running their own side hustles, while the British East India Company grew more powerful and started slowly dismantling the Dutch global monopoly. The VOC took on massive amounts of terrible debt just to continue paying high dividends to their shareholders because they were terrified the stock price would collapse, operating essentially as a state-sponsored Ponzi scheme. By the end of the 18th century, the money was gone, the ships were rotting, and the monopoly was completely broken. The company that invented the modern financial system was officially nationalized and dissolved in 1799, leaving behind a legacy that permanently altered humanity. They proved that pooling capital through public shares could fund projects larger than any single king could afford, and they built the blueprint for modern global capitalism. But they also proved that when a corporation has no loyalty to anything other than its own stock price and profit margins, it will happily exploit, crush, and destroy human lives just to make sure the quarterly dividend gets paid on time. So the next time you hear a billionaire CEO on television talking about shareholder value and corporate responsibility, remember the incredibly violent and chaotic docks of Amsterdam and the brutal history of how that system was actually born. It was not born from a desire to elevate the human race. It was born because rich guys wanted to mitigate their risk and found a way to let the working class hold the bag of a truly flawless system that Wall Street still honors today. If this deep dive into the absolute madness of the VOC and the bloody invention of the modern stock market fired you up about understanding how the global economy was actually built, then do me a favor. Right now, smash that like button to let the algorithm know this conversation matters. Share this video with every friend and family member who loves stories of how wealth and power are truly created. Let us keep exposing what they do not want you to see. I will catch you in the next one, where we break down the next hidden chapter in the history of money and absolute power. Until then, stay informed, stay skeptical, and remember that sometimes the greatest financial innovations are just legalized scams.